Okay, we need to have a serious talk. So, I just jumped off from my one-on-ones with my members. I like to have a one-on-one with them every Tuesday and Thursday with some of my members, just to check in how they're doing, how their trade reports are looking for the previous week, just overall psychologically how they're feeling. And I read a lot of emails, I get a lot of DMs from you guys as well. And needless to say, the Academy members has been really doing extremely well. But there's a lot of people that's also struggling in this world, man. If you're watching this and you're going through a hard time, everyone else is going through a hard time as well. I mean, everyone is going through some tough times, but you need to start seeing it as building character. Now, this is not the motivational talk that you're expecting from me today. Today, I'll have the uplifting conversations with you guys. I'll have the trading talks. I'm not a motivational speaker in any shape, way, or form. A trait of my personality is whenever my friends or one of my members, they go through something in my personality just takes up that stress with them. Whenever somebody close to me goes through hardships, I feel it with them. To a point where if I cannot help them, I get sort of like depressed. I get to the point where I get agitated that I cannot help them anymore. And that's how I'm feeling today. I see so many people struggling in this world, and my aim here with this bootcamp is to help some of you, help all of you if I can, if you guys pay attention, to really just change your situation. And I cannot guarantee anything according to laws, but what I can say is what I'm teaching works, and we'll get into that in today's lesson. So welcome to day 2, by the way. Welcome to day 2 of the Mad Bootcamp. Let's get this out of the way. Let's get this talk out of the way, because these things need to be had. Like if you're in a good situation right now in your life, congratulations. I mean, life is like a wave. Sometimes you have the highs, sometimes you have the lows, just like in trading. But I'm speaking to the people who are in the lows of their life right now. And do not get me wrong, okay? I have massive respect for people going through tough times. I went through tough times myself as well. But I'm not talking down on you at all. We need to have these conversations. I cannot understand some people and why they're struggling. 90% of the time, we are in charge of our own demise or our own destruction. And I'm saying that with the most respect that I possibly can. You're saying you're struggling with trading, you paid thousands of dollars for mentors to teach you, you watch thousands of YouTube videos, but you still cannot succeed. What is going on? I mean, there has to be something that you're doing wrong. Now, I know there's a lot of bullshit on the internet, okay? I know that. But by the 900th video, you needed to smell the bullshit. I mean, shit smells like shit. So at the end of the day, why do you keep looking at shit? You feel me? So if you're struggling with trading, it's your own fault. It's nobody else's fault. Yo, MC, I blew my second funded account. Okay, show me your journal so we can see where we went wrong. No, I haven't started journaling yet. You guys get what I'm dealing with here? It's like being in a relationship with somebody. Let's say you're in a relationship with a girlfriend and you see something that you're doing is bothering her, something that can potentially drive her away from you, but you continue to do that. She's inevitably going to go away. Or if you have a friend and you're talking negative the whole time, you're depressed, you're in a bad mood, way, shape, or form, and yes, we have good people on this earth, and that person might still stick with you, but at which expense of that individual? Back to the relationship part. Let's say you're doing some bad things, and I'm trying to explain this in real world life examples, because trading is a high profile or high performing task, but I'm trying to explain it in everyday life so that you guys can comprehend. But if I'm doing something wrong that I can see hurts my friend or hurts my girlfriend or my wife, and she comes to me and she says, hey, this is really hurting me, am I going to continue doing it? Well, if you're a selfish asshole, then yes. But if you actually want to improve in life, then no, you won't. Exactly the same with trading. If you can see you're constantly making losses and something is happening, you need to change. So please please, if you come to me, my door is open for anybody. I would love to help everybody, everyone. That's my goal here, is to help everyone. But you got to put in the work as well, man. You got to put in the work and work your damn ass off. But doing the right things. Don't watch countless of YouTube videos, become a consumer, let it consume your life, but then you don't take anything and back test. Smell the bullshit, analyze, try and spot what's working, what's not working. So many of you are struggling with things, and I can smell it from the beginning. It's your own damn fault. But I cannot tell it, I cannot say it because I have empathy for you. But at the end of the day, man, let's wake the hell up. Trading is for everybody, okay? Trading really is for everybody. I'm just so damn frustrated, man. I cannot understand. I'm just so damn frustrated. People say they're struggling, and it might be easier said than done for me because yes, you might have financial problems. Yes, you might have lost a relative. Yes, life throws its shots at you. You just got to duck all over the place, and it gets serious, and you don't know even where to hide anymore. It's time to stop hiding, bro. It's time to stop hiding and face it. Get up off your ass, face it, and attack your goals head on. Practically, how you're going to achieve it is spot the things that is keeping you from becoming a better version of yourself. Now with trading, spot what is stopping you from making more wins, what is stopping you from getting higher risk to reward ratios, what certain thing are you doing that's like allowing you to make more losses? What can you do to prevent more losses? Things like this. Just a quick one. Just jumped off from a one-on-one, and I told the individual, show me your loss. And she showed me her loss, and within 10 seconds, I could have seen what went wrong. Just like that. So guys, I'm here. I know the internet is full of bullshit. I know a lot of mentors promised you a lot of things. I know a lot of people promised you a lot of things. I honestly feel I don't have to prove it anymore, but I'm seriously here for you. Why? Because I've been there and nobody was there for me. So my heart goes out to you. So if you're struggling with anything, even if it's something stupid, you made 10,000 and you don't know like whether you're going to make $10,000 next month again, you feel like you're gambling, things like that. At the end of the day, it's a psychological game because anybody can enter or exit. Okay, anybody can buy, anybody can sell. You will make a shit ton of money this month, next month you might lose it all. You might be trading a 0.01 lot and you might be doing good, but the minute you step up your lot size, you might be blowing your accounts. There's a lot of scenarios, but the thing is, I would not know how to help you. And after this bootcamp, I'm going to address all the problems I can possibly think about. But if there's still anything else, reach out to me because that's what I'm here for, folks. Okay, so the video stopped halfway and you're probably guessing what the heck. And I mean, I must confess, I condone myself like a complete noob. I recorded the rest of the video, and after the fact, when we tried to edit it, I realized that my mic had gone flat. So that's on me. I completely apologize. But we're going to hop into the charts right now. Luckily, I have my sturdy old mic here, which recorded the rest of the conversation. So without further ado, I apologize about the instant cut. I love you guys. Let's hop into the charts and let's get started. Okay, so first things first, right? What I want to talk about, and I'm going to get my good old drawing tool here on the chart, is we have time frames in trading, right? We have the weekly, the daily, the H4, the H2, whatever time frame you want. You can literally just pick any time frame that you want. And if you see on the daily time frame, you will simply see a thing that we call candlesticks. Now, if you know your basics, candlestick is pretty simple. But inside of each of these candlesticks, you will see even more candlesticks. And then you'll be like, what's happening? And if you're probably a pretty advanced trader, you'll be like, nah, this is easy. But I mean, a lot of you tend to overthink it, if I have to be honest, bro. So at the end of the day, you would want the higher time frame to dictate your your actions that you implement and then that you take on the lower time frames. For example, if I were to take a trade on the 15-minute time frame, I would want to know what's going on the daily. But a lot of you say you know what's going on the daily, but you actually don't, because while the daily time frame is forming, you want to get in for buys on the 15-minute. But what you don't realize is the daily time frame is just busy creating its high for the day before it's jumping off during London session. Or you'll get a scenario where the daily time frame is coming down and you anticipate a reversal, but then during the London session, we call it the death hour, the market will just jump back down, create another low, break your previous low, and then you missed out on the buy. Then you want to get in on the sell when it broke that low, but then that's the actual low of the day, and then it just reverses against you. Stuff like that, man. It's really not that difficult once you understand time frames and once you understand candlestick maturity. So let me explain the first basics of candlesticks. And you think you might know this, I promise you, you don't. And if you're really wise ass and you're telling me, MC, I really know this, just stick until the end. Maybe you learn something. So we all know that we have a candlestick. Okay? We have our high. This can either be your open or your close, depends on the type of the candlestick, but let's make it practical and let's say this is a bullish candlestick. Okay? This is a bullish candlestick. High, close, open, and then your low. And then this is on the daily time frame. So what we want to do, right, is we want to understand where the high and the low is, because that's important. That's what everybody sees. Now, a lot of people ask me which broker do I use, and the answer is always the same as to which broker I use. But at the end of the day, the prices might differ. Like my prices might be different than yours, your prices might be different than mine. But at the end of the day, the exchanges, they print their high, they print their low. Okay, so for you as a trader, you want to react off from the high and the low. I'm not referring to entries. I'm referring to you want to potentially spot a reversal. You would potentially spot the reversal and then enter after that, or you would potentially just want to see that the market is making the high and then get in with the continuation after it has made the high the following day. Things like that. I always say get the roof and get the floor. So that's what we're going to do. Now, let's say, okay, you now see that you have a bullish candle, but all of a sudden, the market does this. So what happens on the lower time frames is simply, my OCD is killing me, man. The colors have to be the same. So you will get an up move like this. Okay? But before we got that up move, the market needed to come down, because that's what formed this low right here. Now, then we got our up move, and the market came up, created the high, came down, and it closed somewhere over here. Closed somewhere over here. So then the following day, man, this mask is itchy, dude. So then the following day, you would get the bullish movement again, right? And then when the market comes down for the bearish movement. Okay, creates the low and then closes somewhere around about here. Now, inside of these patterns, what I started to notice, inside of my trading journey, inside of these days, you'll get patterns. Okay, you'll get a certain pattern during Asia session, you get a certain pattern during London session, and then during New York session. And if that's not enough, you'll get daily patterns. I talk about the 3-day patterns, and we're going to get into that tomorrow or the day after, I think. We just need to discuss the candlesticks first. So there's a certain way of looking at things, certain patterns that we need to spot, yeah, so that we can try and understand the probability of it happening the following day. Trading is never about precisely knowing. You want to have probabilities in your favor, and then you want to have an edge. That's all that you need with regards to a strategy. You want to have as many probabilities as you can, and then have an edge. Everything else is bullshit. Like, buy this 100% indicator, buy this bot. I mean, come on, man. Let's just stick to the facts. Get your edge, look at your probabilities, take the trade, make your money, and go on with your life. So we can see that we got the uptrend transitioning into the downtrend. Now, in between, we can see, all right, cool, we had a break of structure. We had a break of structure here, and then the market broke the trend, Whoops, here's a reversal, okay? Now, at that reversal, there might be an exhaustion zone, which we will also talk about, or they will be at our equilibrium, whatever the case might be. There might be something that's causing that reversal, and that's what I want to talk about today. Inside of these highs and lows, we already discussed that we're getting patterns during Asia session, London session, New York session. But at the highs and the lows of the day, there's specific reasons why the market turn around. Now, disregarding fundamental analysis for now. So you would want to understand when the high and when the low is created. So you want to understand two things. No, let's draw here. You want to understand two things when you're looking at the higher time frame down to lower time frame. You want to look at the high and low of a session, high and low of the day. Now this, you might be saying like, yo MC, this is very easy. But I'm explaining this so you can understand why we use certain things. A lot of traders, they know all of the strategies around the world, but they don't know how to use it. So at the very least, just sit through this and understand why I'm implementing things. And I'm not just another bullshit mentor on the internet telling you need to do certain things without proper research. Okay, so I'm explaining to you why we look at certain things. Why are we looking at candlesticks? Because we want to spot the high and the low, and we want to spot the session movements. So inside of these, we get trends here as well. We get an uptrend, and then we get a downtrend. Then we get another uptrend as well, then we get another downtrend. There's a reason why the market reversed here. There's a reason why the market reversed here. And here, there's a reason for everything. We call this, the market is being fractal. So what happens on the lower time frames happens on the higher time frames as well, and vice versa. Your goal as a trader is to understand, okay, this happened on the higher time frames. How am I going to execute on the lower time frames? Yes, I know you want to make money, bro. I know that. But you need to understand the lingo, and you need to understand why we do certain things before you can go make your damn money, okay? So at the end of the day, understand that the highs and the lows are important, because back in the day, before TradingView, before MetaTrader, if you traded on a floor, you get like a pink slip or a yellow slip, depends on which exchange you're at. And you got a few prices, but the two that stood out is the high and the low of the previous day. And there's traders that made millions, hundreds of millions of dollars of worth of a profit just based off from that. So that's got to tell you something, folks. That speaks a lot more than any YouTube ever could, because the guys back in the day did it. There's nothing new under the sun, you know. It's the same things over and over again. Now, our tools just got a little bit better, and we can spot these things a little bit better. Now, let's look at a scenario with another time frame variation. You would probably, and I'm going to show this on the charts, we have this thing that we call an exhaustion area, and we will talk about this soon enough. So you would see, or let's call this a resistance area, resistance and support. You see that the market is going up, okay, and you bought here. You see that the market is going up, and you anticipate that it's going to continue going up, and you see that the market closes right here. You're in the money, you see, well, let me do this properly. Resistance area here. You see a candle forming, another candle forming. Let's drop in just a red candle just for giggles. And then you see a bullish candle. Okay, this is on the 15-minute time frame, by the way. 15-minute. So then the next thing that you see is you think that the market is going to close bullish. Okay, you think that you can take another buy and the market will continue going up, because I mean, we just broke above resistance. And you might be right, you know, you might be right. But one thing that you need to consider as a trader is you need to understand a thing called candlestick maturity. So let's say that the high of the day is run about here, the high of the previous day. Well, no, let's scratch that. The high of the previous day is here. You just broke the high of the previous day. Sky is the moon. You're gonna make a sick amount of money, right? That's what we think. Next thing, we tested the low. Everything is looking perfect. I mean, we already tested the low. We already tested the high. Come on, bro. This is easy. This is a piece of cake. My son can do this. One thing to note though is on the 30-minute, let's say this was 14.15, okay? Then all of a sudden, here comes a red candle. Wham bam. Thank you, ma'am. Stop loss hit. Thank you for playing. Please come again. And then you're all of a sudden, you're like, damn, this thing closed bullish. It closed above the previous daily high. What did I do? And then I'm gonna tell you one simple thing. Do you think the market is in a range all the time? Do you seriously think that? Like, does it feel sexy on your face when you think that? Because it's not sexy at all. I mean, it's a lie. The market is not in a box 24/7. The market breaks out or it fakes out. That's what happens. If it tests a high or a low equally, there's a snake in the grass somewhere. Something is up. Because it very rarely happens. And if it does, it potentially tested another high before it came back down or something like that. There has to be some thesis, but we will get into that. But for the purpose of this video, it broke through the exhaustion area or the resistance area, it broke through the previous daily high. I mean, why did it not come down? Then you'll be like, oh man, trading is not for me. This thing is unpredictable. It sucks. I just lost all my money. At the end of the day, dude, you just did not pay attention to candlestick maturity, man. You just gotta pay attention, dude. So let's say this was 14.30. Then it's gonna tell you a different story, my man. It's gonna tell you a different story. What's gonna happen is it's gonna come down and then push back up. Why is that? Because at 14.30, the 30-minute candle already closed. If it was 14.15, it was only the first half of the 30-minute candle that closed on the 15-minute. So that means we still got another 15-minute, the equilibrium, the half, for the candle to push back down or to push up, whatever the case might be. If it's strong orders, if there's aggressive buying coming in at that level, a lot of people will try and grab orders right there and it will come back down, because the 30-minute is obviously bigger than the 15-minute, so it carries more weight. So at the end of the day, that's how you get faked out or stopped out. You think it's going to go with a trend. It comes back down. It basically comes back down and then all of a sudden comes back up. So this will be another candle. This will be another candle. So this is the 14.30 candle. Another one would be forming here, 14.45, and then all of a sudden the 1500 candle would form. This is where you want to be, folks. This is where you want to be, because this is the 1500 candle right here. Why is it important? Because, oh, my bad. That is when the second 30-minute candle closed, the hourly candle closed, and sometimes if you know your shit and if you're in the right time zone, the 4-hour candle closed as well. So you have so many backing power with regards to your candlesticks, and then the high and the low of the time of the daily, you're jumping in with the trend. This is not jumping in with the trend if you simply just buy above resistance. I know we all want to catch these highs, and it's of course going to happen once we break right here. Okay, we all want that. Or let's say you're a break and retest trader. Let's say you're something like that. Okay, let me clear this up. Let's say you're a break and retest trader, and you just broke, and now you're waiting for the market to come back down. It's going to happen to you again, because 14, 15, or let me just change the time zone, because I know I'm going to get emails, people asking me, yo, MC, is only 14, 15 that this is happening. No, bro, it happens anytime. Let's say 9:45, and then all of a sudden the market comes down. You're a 5-minute trader. I don't know why you're doing that, but you're a 5-minute trader. The market comes down. You're going to buy here on this break and retest, and you're anticipating to make a shit ton of money. What's going to happen is it might come down, and then it might come up because it's 9:15 now. So then the market just plays a game with you, comes back down, and then your stops are hit, my boy. You know? At the end of the day, just got to understand candlestick maturity once again. So let's come back to the details, and let's actually just explain this on a chart. We're on my favorite time frame on gold. And what we always want to do, let me just remove these beautiful magical lines that we have right here. We want to have a look on the daily first, because as you can see, there's a hell of a lot of data. There's so much data. We want to go to the daily time frame first, and we want to anticipate, or we want to spot the highs and the lows of the previous day. So for example, for today's analysis, we want to spot the high, right here. We want to spot that open, the close, and then the low. Okay, now if you have a big wick like this, we also want to spot the 50% of that big wick, because it's rejection. We will look at the VWAP later, but because of the rejection, a lot of traders will want to come and grab orders at the 50% of the rejection, because now this is just food for thought. The market came down, but then all of a sudden it got rejected. So buyers stepped in, and then as some of you don't know, well, hopefully a lot of you know this, if I'm a big investor, I cannot just hit 100 lots or $1 billion into the market just because I want to. I have to slice them up at certain points. Now the 50% is a very key area where that happens. They would feel like they missed out. They want to come back up, maybe at the 9:15 candle where they fake you out, and then you come back down 50% and then hit back up. Okay, that will usually happen. And we capitalize off from movements like this, but regardless, we have our high. We have 1, 2, 3, 4, 5 lines on our chart. So now let's go down to the 15-minute, and you can simply just spot how accurate these movements are. Now, this is not set in stone. We use a lot of other things such as equilibrium, our exhaustion areas, our baseline tests. There is a lot of other things, our London high, London low, Asia high, Asia low, whether it broke above or below. We use a lot of these things, and it's important to understand that nothing that I say is just going to be like, okay, MC said that, so it's gotta be like that. I went 10 years through this game, so I know what works and what doesn't work. But when I say you have to wait for a break above Asia, you have to wait for a break above Asia, but it's not the only thing that you need to do, okay? You have to look at, once again, confluences. So they add a lot more probabilities in your favor. So next thing we want to do, let's look at our exhaustion areas or support and resistance areas, whatever you want to call it. We will get to the true definition later. And then we've got an exhaustion area here. Now we can see, okay, on the 15-minute time frame, it might have looked like we broke above. We broke above our previous daily, what's this? Our previous daily, which one is the third one? Previous daily close. Okay, it might look like that. I mean, of course we broke above. Rule number one is there is no wick to the downside. We will get into the definition of that later as well. But there's no wick to the downside, so it needed to be filled. But it broke above, and we're anticipating some bullish movement because we had this nice uptrend yesterday. It's going to come back down. We tested a support area. I'm just trying to think what a lot of traders can think about. I mean, we're constantly in a battlefield in our minds trying to convince ourselves that the trade is worth it to take. And it's not always like that. You just got to take a step back and realize where you are in the market, and then you want to execute. So I saw the break above, and then simply just look on the 30-minute, folks. You can see it was actually just turned out to be a beautiful engulfing candle. And that's what I said in the beginning of the video. The market simply just came up, created the high, and then came back down. This right here is the same as what happens on the daily time frame or any higher time frame such as the weekly and so forth. So it will always just, while the candle is forming, it's searching for its high and it's searching for the low. Okay, let's get that set in stone. It will always search for the high, search for the low. Your job is try and anticipate where the high and low is going to form, and then you react off from that. So whether it be on the daily, H4, any time frame that it is, you want to try and understand where structure is on any time frame and trying to get in on the high and the low, or if you want to be safe, the break of the high and the low. But you need to understand candlestick maturity first. I myself like to see the high or the low be tested, and then it to be broken, and then I enter, because that's how I'm safe. I look at that, it gives me 3 chances to miss out on losing a trade, if that makes sense. So I give the market 3 chances to try and convince me that it's going in my favor, and then I simply just execute. So it's very, very important to understand this. And then in the same breath, I want to say, we spoke about the first point, the daily high and the low, but then after that, you want to look at the session high and low. Now, this is very important because it's going to grab hands with our next video where we look at the daily cycle, such as the red setup day, the green setup day, where we can see 1, 2, 3 patterns happening. On the second day, the market will set up for the third day explosive move. That's beautiful. So we need to understand that the sessions, they tell a story, okay? If what I would like to see at all times, if I want to take a buy during, if my bias is going long, because I see now that we already tested the low of the previous day, and I can see that the trend is going up, because, I mean, it's pretty simple. The trend is bullish, okay? Or the trend is bearish. You can see it very straightforward. So what I want to see then is I want to see my high or my low of Asia session being broken. So if I want to take buys, I want to see my Asia session being broken. Asia session sets up for the day. If I want to take some sells, I want to see my Asia session low being broken. As simple as that. So buys, Asia session high broken, sells, Asia session low broken. So at the very least, you need to wait for the Asia session to test what is happening. Now, you might have seen, okay, MC, we broke the low here during Asia session. We did not break the high yet, but look at this. Look at it this way. Now, you might argue that it broke below my Asia session low, so we're definitely not taking longs during NY session, because it broke my Asia session low, so I don't want to take any longs during NY session. But that is okay, because what it did is it set up the move for the second day, because it might have created a false break reversal for me. And that's the day 1, day 2, day 3 setup. So hopefully you can see how the lows and the highs of the previous day, they play a big part. So what I need you to do as homework is at least find your favorite pair and go and draw the highs and the lows of the previous days. So the past 10 days, go and draw the highs and the lows, okay? What you do then is you draw the highs and the lows of the sessions. Here is my indicator that I use for the sessions. It's called SonarLab Sessions. Here is my settings. I'm going to scroll through slowly. Just stop the video and go through that. I need you to then draw the highs and the lows of Asia session, and then London session, and then NY session, because NY session plays a role for the following day. Remember, always find your roof and your floor. That is so damn important. That's what I need you to do. When you hop on the charts, always find your roof and your floor. Why? Because that's what created the range for you to trade from the following day and for the current day. You cannot just go and trade in no man's land and expect to make some decent profits. You need to have a structure that you need to work off from. What you do then after that is you look at what happened during Asia session and then what happened during NY session as a result of Asia session. Okay? So I hope I said that right. What happened during NY session as a result of Asia session. So you then go and draw up your levels, and then you spot those movements. After that, I need you to have a look at the candlestick maturity. So for example, let's look at an example, because gold has just been all over the place lately. I got my high from Asia session, and I got my low from Asia session. I need you, let's say you drew this up on the H1, and then maybe you can draw this high as well, but it's spotted in an exhaustion area. And then you can draw the low of NY session. You can draw this one first, and then you can just create a thesis for yourself. You saw that it broke the initial low of NY session, and then with tomorrow's video you understand why I told you to do this, because it's going to create one big beautiful story, and it's going to melt together so that you can understand your daily bias every single day. So the third thing I need you to do is look at candlestick maturity. For example, what we spoke about in the beginning of the video. On a 30-minute, once again, look at the timings. Place your vertical line on, and then you will see 14:30, exactly what I said. This is when the 30-minute candle starts. Okay, so we see on the 15-minute time frame, it started and it closed above. The market then wicks up and then comes back down. But let's say you did not know that. What will happen then is, once it comes back down, because this candle started at 14:30, it's going to end at 1500, it just respected that exhaustion area. Exactly the same scenario. Just rewind a little bit back if it's confusing, but we drew this up. This is exactly that scenario that happened. We will see it time and time again. And if it gets confusing, use the H4 in the daily, or use the H1 and the H4. It's going to be 4 H1 candles in the H4. So that's your homework for today, folks. Draw the highs and the lows. Remember, the market is always in a roof, in a floor. I don't care what you call it, liquidity, sweeps. I really honestly don't care. I'm going to show this to you in the most practical way you possibly can, so that tomorrow we can piece the puzzles together, and then the day after that we can understand our daily cycles. I hope you guys enjoyed this one.